Gregory, I want to ask you about supply chains. And we were discussing earlier the lorries that are stacked up from Kent and Calais as they wait for clearance across borders. But it gives us a sense of just how much pollution is going on out there, trying to bring goods into the marketplaces, whether it's in the UK or into Europe. How much of this changes down the track, given what we've seen around supply chain challenges with COVID?
I think that the issue that a lot of the businesses face is that there's just so much, everything is just totally unclear. And in terms of the Brexit negotiations, no one really has any clarity, and it's very difficult for business. At least, for example, the business owners that we look after, they tell us that there's a tremendous amount of uncertainty, and it's difficult for them to actually make decisions, investment decisions, stock decisions. And the reality is, and it's for that reason, I think they'll be putting a lot of pressure on the Johnson government to come up with some sort of a last-minute arrangement, because ultimately, putting the political debate and sovereignty to one side, from an economic perspective, probably both sides are better off with a deal. And I think that that people are really trying to deliver that message behind the scenes. So hopefully we will see some sort of deal. That is our base case, whether it's skinny or overweight or who knows. Ultimately, what we would like is some form of transaction so that we can get back to business. In terms of positioning around that, it's been a very difficult ride in terms of sterling, but we are bullish on sterling, and we have in our flagship portfolios hedged out some of our dollar risk back into sterling to benefit, hopefully, from a rebound in sterling on the hopes of some sort of thin deal.
What are you calling on sterling then as we sit perched above 134?
Okay, so just in terms of levels, if we do get some sort of a deal through, I mean, obviously it's difficult to say, and it's a forecast, but I would certainly see high 130s against the dollar. And I guess from our perspective, the reason why there's more conviction sterling versus dollar as opposed to sterling versus euro is just because from a USD perspective, chances are there'll be a lot of issuance in terms of the US Treasury market in 2021. So potentially that could put a little bit of dampening effect on USD. So hopefully we get a little Brexit magic that will give a bump up for sterling, and Treasury issuance will potentially result in a little bit of weakness on the USD. So we get the double whammy. So hopefully next year trading above 140. That would be our hope.
While we have you, can I ask you about long-term consumption habits? And coming into this crisis, we saw a lot of demand for luxury. Investors are very much putting their money into what we consider the fangs of Europe, some of those big luxury names. Has anything changed on the back of this crisis, consumption habits, whether people want to spend that much money on luxury items?
I mean, I'm not a luxury equity analyst, luxury analyst, but what I will say in terms of Europe, I think I'm not dodging the question, but just in terms of where we see interest in terms of Europe, I think that probably the interesting area to look at is maybe some of the contrarian plays, and that could find itself in the format of European banks and maybe even energy. If we do indeed see the vaccination rollouts and they do indeed work, and there is a high acceptance rate, we could probably see mobility increase, which could then in turn fuel a rally in oil, which could then in theory help the earnings of energy stocks, which, as we all know, are very beaten down. Related to that, of course, is the financial sector, in that if we do start to see some economically sensitive sectors start to do well, maybe the 10-year US Treasury the yield starts to inch up a little bit to give further confirmation that the economic sensitive stocks should indeed rally, and maybe banks do a little bit better on the back of that. I think that's where a little bit more of our research focus is being allocated to at the minute.
Karen, I thought when you were asking about his consumption habits, you wanted to know how he took his martini. I would expect very dry with an olive. Gregory, let me ask you, just on the issue of non-consensus calls at the moment, I mean, there's a lot of herding right now among the big houses about how they think next year is going to play. Have you got anything that's very non-consensus that you think might actually do okay next year and perhaps no one's really casting an eye over?
Yeah, I mean, that's an excellent question. I mean, and I think the response to that is energy stocks. I mean, speaking to my colleagues, there's not a lot of us right now that are looking at energy stocks, and the reality is that they are beaten up. There's of course the headwinds of ESG. There's the prospect of all the challenges that the travel sector is undergoing. But the reality is that, like I said earlier, if we do start to see vaccination take up, and they do indeed work, all of a sudden we could really see some of those energy stocks roaring back later next year. So that's absolutely something that is on the research docket. We're doing the work right now, trying to determine whether that's going to feature into our flagship portfolios, yes or no.